So let us quickly recall whatever terms we had covered in the previous session. We started with financial statements. I told you that there is financial statement, then there are users of financial statement. Okay, the financial statements is prepared by the management using some FRF. Now the problem arises that how are the users going to place reliance on these financial statements? Okay, so we have the concept of auditing. Okay, in auditing we covered the definition. The definition is something like this, that auditing is an independent examination of financial information of an entity. That particular entity, it can be of any size, it can be of any form, okay, whether profit oriented or not. And when such an examination, this auditing is conducted with a view to give an opinion on the financial statements. Okay, so the auditor is appointed by the management to give basically opinion on the financial statements. Okay, now what kind of opinion does the auditor give? The auditor will give the opinion that whether the financial statements are giving true and fair view or not. True and fair view. Okay, now true and fair implies that if all the things are correctly, truthfully recorded in the financial statements. And when I say fair implies that everything has been fairly presented also. Okay, all right. Now a financial statement is going to be give true and fair view only when it is free from material misstatements. So we even covered the two terms, material and misstatement. So let me discuss misstatement first quickly. Misstatement means what? Any I can say mistake in the financial statements. Okay, if I go in technical terms, I can say that misstatements means any difference between what is required by FRF and what the management has basically put in the financial statement. So I gave you, if you remember, I gave you the example that management has valued their inventory on the basis of LIFO method. So this would amount to misstatement. Okay, now if management omits something altogether which is required by FRF, then that too will also amount to misstatement. I even discussed that misstatement may be because of either fraud or error. When somebody does an intentional misstatement in the financials, it is known as fraud. If the misstatement is unintentional, it is called as error. Okay, however, as an auditor, we are not concerned with all the misstatements in the financial statement. Very trivial misstatements will not be concerned about it, but we are only will be only concerned with material misstatements in the financial statement. So what do you mean by the word material? Now material is something I can say which is of significance. Okay, material misstatement, if there is a material misstatement in the financials, it may basically impact the decisions of the users. It may influence the decision making of the user of the financial statement. Okay, so material, something can be material either because of the magnitude, as in the size, okay, or it may be because of the nature also. If you remember, I gave you the example that yes, magnitude, basically let's say inventory is 8 lakhs out of 10 lakhs. Okay, and nature, it can be let's say loan to director, even though the amount is very small, but the nature of the transaction is such that it needs to be brought into the attention of the shareholders. Okay, so this is material. Now I told you this, that misstatement is either because of fraud or error. We have already covered this. Lastly, we covered the concept of internal controls. I told you that internal controls are processes, policies, procedures implemented by the management. The purpose of having internal controls in an organization is basically to prevent, detect and correct the chances of the risk of material misstatement. Okay, so the chances they want to prevent or detect or correct that the financial statements shouldn't have any kind of misstatements in it. So that is why the management implements internal control. Okay, all right. And I told you this, we studied this interrelation also, that if internal controls in an organization is adequate, let's say, okay, so I told you this, that the chances of material misstatement would be less. The chances of material misstatement, risk of material misstatement would be very less. Okay, all right. Now before I start with the concept now, just one more aspect I want to discuss, that I've already told you that misstatements is either due to fraud or it is due to errors. Okay, now out of, let's say, misstatements arising out of fraud and error, I want an answer from you all, that for an auditor, which misstatement out of these two will be difficult to detect? Now I've told you misstatements can either be because of fraud or error. Okay, so which particular misstatement out of these two for an auditor will be difficult to detect? Yes, please, I want an answer. Yes, fraud. Why do you think, Ashwarya? What is the reason? Okay, they must have adjusted it. They must have carefully made some changes or adjustments in the financial statement. So the answer is absolutely correct. Let me put it in this way: misstatements because of fraud for an auditor will be relatively difficult to detect as compared to misstatement due to error, because when there is fraud involved, obviously the employees, the management, they might basically conceal all the frauds. Okay, they must have created some layers so that the auditor will not be able to find out the fraudulent transaction. Okay, so because fraudulent misstatements are intentionally done, they also try to conceal it. Okay, so relatively for an auditor, misstatements arising due to fraud will be difficult, obviously, then to detect misstatements arising out of casual errors. Okay, so we are also going to discuss this in the upcoming chapters. All right, now before I start with the concept now, whatever we have covered this morning, this in the previous session, I just want you to take a note of it. Okay, I told you that you have to keep a copy ready, so I would want you to copy this down in your copy. Okay, I'm just switching the screen to the board mode now, and so that it is going to be easy for you to copy. Okay, so just write the heading as auditing basics. We are just going to cover certain basics again here. Okay, so I told you that management basically they maintain, let's say, yes, management maintains accounting records. Management maintains accounting records. Okay, and through this accounting records, using this accounting records, let's say, okay, they prepare something which we call as, let's say, financial statements. Okay, now let's say we have an auditor here. This is the auditor here. Now auditor, what does he do? He basically assesses. Auditor basically assesses whether the financial statements are as per FRF. So auditor is going to check whether the financial statements made by the management is as per the applicable financial reporting framework. Okay, so how is he going to assess the same, whether the financial statements are as per FRF or not? Obviously he is going to check the accounting records and he is going to check the financial statements made by the management. Okay, now let's suppose he assesses the financial statements and he finds certain mistakes. Okay, so he finds certain misstatements, so he will basically, what is the next thing that he is going to do? He is going to basically propose certain changes in the financial statements. He is basically going to propose necessary adjustments in the financial statement. I am writing it as FS. He is going to propose necessary changes in the financial statement. Okay, now what is going to happen next is, once, let's say, that necessary adjustments are made in the financial statement, okay, again a fresh financial statement will be made. Okay, or let's say the necessary corrections will be made. So we are going to call it as, now we are going to call it as audited financial statement. Okay, but along with the audited financial statement, this is just the corrected financial statements. Auditor now will obviously, he is going to issue his opinion also. I told you, when the auditor doesn't issue his opinion verbally, he is going to write his opinion somewhere. So now the next point will be, the auditor is going to issue opinion. Okay, and how does he issue his opinion? He will be issuing his opinion in the form of something which we call it as audit report. Audit report. Okay, so this is the entire scenario. We studied this in the previous session. Now what is going to happen, the users will now basically have access to these two things. The users will now basically have access to these two things. Users. Okay, and because of audited financial statements and an audit report thereon, because of the audited financial statements and an audit report thereon, the reliability of information contained in the financial statements will increase. This simply means that the users will be able to place more confidence now in the financial statements. Okay, so this is what we covered in the previous session. I hope you have taken a note of it. So just give the headings as basics, auditing basics. Is this clear to everyone? Yes? Okay, all right. Now, the second important thing that we have to cover today is basically I want you to take a fresh page again, and we are going to understand something that I call it as the audit process. The audit process. Okay, now in this particular topic, the audit process, we are actually going to understand how the entire audit is done, how the auditing work is started, how it is ended, the entire process. We are going to understand the entire processes of auditing. Okay, and if you understand the entire process of, obviously all the chapters that we are going to do will be chapters from these processes only. Okay, I am going to give you an overview now, and the details of each aspect we are going to study later in the coming chapters. Okay, so audit process, how does the auditing process start with? What is the first thing that we have to do in case of auditing? Okay, so the audit process, the first thing that you have to understand is that the audit process, it starts with appointment of auditor. It starts with appointment of auditor. Okay, the first thing that we have to do is appoint the auditor, appointment of auditor. Okay, now when I say appointment of auditor, okay, try and understand this, that regarding appointment of auditors also, the management, they cannot randomly just appoint any auditor and get the audit start with the audit work. Okay, how will the auditor be appointed? Generally, in most cases, it is given in your law. Okay, in the respective laws. For example, if I want to appoint an auditor for a company, section 139 of the Companies Act basically tells me how the auditor will be appointed. Okay, similarly, if let's say an auditor for a bank has to be appointed, okay, so their banking act probably will tell how the auditor needs to be appointed. So appointment of auditors generally is basically, I can say, is governed by the provisions of law. It is mentioned in law generally in all cases. Okay, but there are few cases wherein I can say that the appointment of auditor is not governed by any law. Okay, now before I discuss further, just a few things I would like you to understand. Okay, now let's say just understand this aspect. Okay, let's say we have a company, okay, XYZ Private Limited. Okay, now I'm just asking you, let's say it is a very small company, it is a loss-making company for the timing. Let me just put it in this way. It is a very small company, newly incorporated, and it is a loss-making company. Do you think, even if it is a loss-making company, is audit necessary for a company? Is it compulsory to get the financials audited in case of a company? Yes, I'm waiting for your answer. Is it necessary? See, yeah, in the previous session also we discussed that. Okay, even if let's say the company is making loss, they would want to they would need to have an AGM, and in AGM the four businesses they have to discuss. One is adoption of financial statement. So please understand this. In case of companies, it is always essential, whether it is a loss making company or a profit making company or a big company or a small company, whatever it is. Okay, it always has to get the financials audited. Okay, so if I take the case of XYZ Private Limited, please understand it has to get its audit done under the Companies Act. The Companies Act, let's say. Okay, Companies Act, one audit will be done. Okay, now let us say this audit will be done. Now let us say that this company grows, and for the financial year, let's say 1920, the turnover of the company is greater than 5 crores. Let's say it is somewhere around 5.5 crores. Now please understand, if let's say the turnover is so high, 5 crores, the company would need to get another audit done, and this audit would be for the purpose of income tax. Okay, this is known as statutory audit, has to be done as per the Companies Act. Now this will be known as, let's say, income tax audit. Income tax audit, obviously to be done as per the Income Tax Act, okay, under section 44AB. Now 44AB says that if let's say, I'm not going in detail of section 44AB, but let's say if the turnover of a business exceeds 1 crore in a financial year, it has to get its accounts audited. Okay, alright. And similarly, we can also have, let's say, GST audit on the basis of turnover. Okay, so one company, are you able to understand that one company has to undergo three types of audit? Okay, but for each of the scenarios I'm telling you, the first, whatever audit you are going to do, let's say for XYZ Limited, you have to be appointed first. Okay, now Companies Act, if let's say you are going to audit XYZ Private Limited as per the Companies Act, then your appointment will be governed by section 139. We are going to discuss this in company audit chapter. Okay, that this one section 139 states that the company auditor will be appointed in this manner, everything. Okay, so I told you this, generally the appointment of companies is governed by the provisions of law. But now for income tax audit, Income Tax Act is silent regarding the appointment of auditors. They say that whosoever you want to appoint, you can appoint, but just file the returns, but just file the audited statements in a timely manner. So Income Tax Act is silent about the appointment of auditors. It only mentions that this is the format of the report which the auditor needs to basically submit, let's say before this and this date. Okay, so income tax, it is again silent regarding how the auditor will be appointed. Okay, so why I have drawn this, I just want you to understand that the first step in the audit process is appointment of auditors. But again, in most cases, appointment is governed by the statute, but there are certain cases where the act is silent regarding the appointment of auditors. So here, for the purpose of income tax, the management can just approach the auditor they want, and they can do the necessary formalities and appoint the auditor. There is no law as such for this income tax audit, and hence they don't need to comply with anything under Income Tax Act for the purpose of appointment. Okay, so done. Similarly, the company will have to undergo a GST audit. Now let's say this was a case of a company. Let's say we have a XYZ firm, XYZ company. Okay, the turnover is 5 crores, is greater than 5 crores. Now obviously, since it is not a company, it doesn't have to basically go for a statutory audit under Companies Act, obviously. But let's say even if it is a firm or a sole proprietor, now because the turnover is greater than 5 crores, they may have to go for income tax audit. And obviously they might also have to go for what? GST audit. Are you able to understand this? Yes. So again, when I say income tax audit, when I say GST audit, probably the appointment is not mentioned in the Income Tax Act. So they are free to choose their auditors without any necessary compliance with the Act. Okay. So the first thing is we are covering the audit process. I want all of you to keep on drawing this process in a fresh page. Okay. This topic is really very important. So appointment of auditor is done. Now the first thing is the appointment of auditor is done. Okay. Now the second part, what is the second step in the audit process? Okay. Now, second step, very important step again. Let's say Divya has been appointed as the auditor of a company. Now, the second thing which Divya needs to do is she needs to understand, she needs to determine the objective. She needs to determine the objective and scope of audit. She needs to determine the objective and scope of audit. We have two words here. First word is objective and the second word is scope of audit. Okay, now what let's understand what these two words mean. Okay, now let's say Divya has been appointed for a audit in a company XYZ Private Limited. XYZ Private Limited. Okay, now she should first understand, okay, that okay, her appointment is in XYZ Private Limited, but what is the objective of the audit? What is the objective of the audit? She needs to understand that. So for this particular word, objective of audit, I would want you to come back to the notes on the third page of the fundamentals chapter. Here you can see that these two words, objective of audit and scope of audit. First let us read the definition from this part, and then I'll give you some practical examples to understand. Okay, so what is the objective of audit? The objective of audit of financial statements. Now, because in CA Inter I told you auditing is a very vast term, but in CA Inter syllabus we are only going to focus on auditing of financial statements. Okay, so objective of audit will be what? The objective of an audit of financial statements is to enable an auditor to express an opinion on such financial statements. So once Divya is appointed, let's say, she needs to understand that her appointment, the objective of her appointment, basically she has to express an opinion on the financial statements. What kind of opinion she is going to express? She has to see whether the financial statements are as per FRF or not, whether management has made the financial statements as per FRF or not. If it is as per FRF, that means that the financial statements are giving true and fair view. This means that it is free from material misstatement. So she is going to give her opinion accordingly. Okay. So this is objective of audit. Okay. Now, then comes scope of audit. Now, what is scope of audit? Okay, please understand. Scope of audit means determination of range of activities. Now, what all things Divya has to basically do after her appointment. Let's say when she starts the auditing, what all things she has to check, what all things she needs to check is basically the scope of auditing. Scope of auditing means the range of activities, all the things which she needs to check in order to give an opinion in the financial statements will be the scope of audit. Okay, so determination of the range of activities and the period of records that are to be subjected to an audit examination. What all things she needs to check. Now, scope is basically the area, the things which I need to consider in my audit. Okay, now for example, let's understand this with the example which I have drawn here. Okay, yes. Now let us say, please try and understand this. XYZ Private Limited. Okay, Divya has been appointed as an auditor in XYZ Private Limited. Now, let's say Divya is the auditor, I am the client, I am the management. Okay, so Divya comes, I am sitting here and Divya is sitting across the table. Now she asked me for the financials. I gave her the financials. Okay, she goes through the financials, and she keeps on asking me certain questions. Okay, but then I realized that she's asking me questions more inclined towards the income tax aspect. Okay, she is asking me everything related to income tax aspect. Okay, so I just tell her that why are you concerned with all these questions? Okay, I have appointed you, we have appointed you for the purpose of company audit. But you are asking and you are questioning us things which are basically to be given in income tax audit. So then Divya tells, oh, okay, I thought you have appointed me for income tax audit. I'm so sorry. I thought that you have appointed me for income tax audit. Now imagine if these things happen, okay, you have been appointed for company audit, but you start auditing from the perspective of income tax audit. Obviously, it is not going to look good, okay. So that is why I told you, the moment your appointment is done, okay, determine what is your objective of the audit, and accordingly you have to check on the scope of audit. Scope means what all things you need to check in order to basically do one particular audit. Now let's say Divya has been appointed for company audit. Okay, now when I say company audit, obviously in this particular audit Divya would be more concerned with checking compliances with the various sections of the Companies Act. right? But when I say Divya has been, let's say, appointed for income tax, her scope of audit, her areas, the areas that she is going to check now will be more from the perspective of what? Income Tax Act. And obviously under GST audit, her scope again will be from the perspective of the GST laws, the CGST, IGST Act, whatever it is. Okay, so please understand now, the moment Divya has been appointed, she needs to understand the objective of her audit, and she needs to be very clear on the scope of audit. Scope means what all activities, what all things she needs to check. Okay, now again let me tell you this, that generally, now I have given you 3 examples here: company audit, income tax audit, GST audit. Okay, now generally the scope of audit in these 3 cases, scope means as in what all the auditor needs to check. Okay, so generally in these 3 examples which I have quoted, the scope of audit is determined by the law. The scope of audit is determined or given by the law. Now what all things under Companies Act the auditor needs to report is given in the law. Okay, so in short I can say, when I say that yes, Divya has to determine the objective and scope, so in most cases the examples which I have given you, the objective is, the scope of audit is determined by law, right? Now are you able to understand this point? Is this point clear to everyone? Yes, okay. But let me come up with certain cases. Where let me just give you one example. Generally, where let's say the scope of audit is not governed by let's say the law. Okay. Now we have a company here. Let's say XYZ company. XYZ and company. It is a sole proprietorship firm. It is a sole proprietorship. Do you understand what sole proprietorship means? Yes. So it is a sole proprietorship concern. Okay. Now, sole proprietorship concern, okay, because they don't have any act as such, it is not required to undergo any audit. But yes, if they have a turnover of let's say 1 crore and above, under section 44AB of the Income Tax Act, they have to get their books of accounts audited by an auditor. Okay. But now let's say XYZ and company, and let us assume that they have a turnover of 50 lakhs. They have a turnover of only 50 lakhs. Now my question to all of you is, are they required to get their financials audited under Income Tax Act? No, not required. Okay. Now, okay. It is not required. But let's take up a case. Okay, XYZ and company, a sole proprietorship, they approached a bank. Let's say they approached HDFC Bank. Okay. Now, XYZ and company approach HDFC Bank for a loan of let's say 5 crore rupees. Okay. The manager of the bank obviously would ask XYZ and company to produce the financials. Okay. XYZ and company produces the financials to the manager of XYZ of the HDFC Bank. Now what happens? HDFC Bank manager looks at the financials and says, "Oh, your financials are not audited. What is the reason?" So the proprietor will obviously say that we are a sole proprietorship concern, and because my turnover in the financial year did not exceed 1 crore rupees, so I'm not required to get my books of accounts audited. So this is what the sole proprietor, the proprietor would say. Okay. Now HDFC Bank manager tells that, "Sir, but as per the bank's policy, we can only give you loan if we have basically audited financial statements. We cannot trust these financial statements of yours unless it is audited." Okay. So the proprietor says, "Okay, manager, sir, you only tell us what can be done." So the manager tells XYZ and company that get the financials audited by an auditor. Approach any auditor, get the financials audited. Okay. Now let's say XYZ and company approaches an auditor. Okay. Now this auditor, the first thing is going to ask XYZ and companies, "What kind of audit do I have to do? You are not falling under the Income Tax Act because of the turnover. You are not a company, so I don't need to do an audit under Companies Act. Your GST turnover, GST limit is also not exceeding the turnover limit, so GST audit is also not required. So what do you want me to do in your audit?" So the XYZ and company will say, see, my purpose of getting the financials audited is to get a loan from the bank. The HDFC manager told me that I have to get the financials audited, so that is why I have come here. So what I will do here is, let's say I am the auditor, and generally what will happen here, the HDFC bank manager will intimate me that yeah, these are the requirements for the audit. So in this particular example, please understand the scope of audit, what all things I need to check as an auditor. The scope of audit is not stipulated by law, but by the HDFC branch manager. We are doing an audit here only for the basically whom? For the HDFC bank manager. Okay, so the scope will be determined here in this case by the bank manager. Okay, so please understand, whatever may be the case, scope generally in most cases is determined by law, but sometimes it may so happen that the person who needs to have the audited financial statements will basically tell the auditor the scope of audit. All right, now let me give you one more example here. Now let's say there is a firm A, B, C and company. It is a partnership firm. Okay, now with three partners A, B and C. Okay, now they want partner D, they want a person named D to become their partner. Okay, now let's say D is also interested in becoming their partners. All right, now when they get to know that D is also equally interested, they think of something. They thought ABC, all the three people, they held a meeting and they thought, because D is also interested in entering into a partnership with us, let's charge goodwill from D. Let's tell ABC and company, let's tell D that in order for him to become a partner in ABC and company, he has to bring in this much of capital and this much of goodwill. Let's say he needs to pay goodwill to us. Okay, so let's say ABC and company told D that he needs to pay 1 crore rupees as goodwill in order to become partner. Okay, now D was very smart. Okay, he told, okay, I have no problems in paying 1 crore rupees to you guys as goodwill. Okay, but for that I first need to check your financials. So ABC and company were like, okay, all right, you check our financials. So D tells, no, I am not going to check. I'll send an independent auditor. I will hire an auditor. The auditor is going to check your financials. He's an independent person. He's going to check the financials, and basically whatever opinion he gives me, accordingly I'll think that whether I should be paying you 1 crore rupees as premium or goodwill or not. Okay, so what has happened here? The auditor now here is going to audit the financials of AB and company, taking in mind admission of D into the partnership firm. So who has determined the scope of audit here? Obviously, if the auditor was appointed by D here, so the scope will be determined by D. The auditor will be clearly instructed that yes, the purpose of audit is basically to check whether they actually have like goodwill of 1 crore. Do I actually need to pay goodwill of 1 crore for entering into the partnership agreement, right? So in this example also, the scope of audit has been determined by whom? Not by the statute, but the person requiring to get the financial statements, person who needs the audited financial statement. So in this case, the scope was determined by the bank manager, and in this case, the incoming partner basically appoints the auditor to determine whether he actually needs to pay this much amount of goodwill. Okay, so coming back to the second point in the audit process. Okay, appointment of auditor is done. Then we understood the word determine the objective and scope of audit. Again, let me tell you very clearly, objective means that the auditor has to issue an opinion, has to give an opinion on the financial statements. Okay, and when I tell about scope, when I say the word scope, you just remember two words. Scope means the range of activities the range of activities and the period, months or years of records, and the period that are subjected to an audit examination. Okay, when I tell about scope, what all things do I need to check? This is range of activities, and obviously, and the period, that means months or years of record that are subjected to an audit examination. Now please understand, let's say I have been appointed by you to do a half-yearly audit. When let's say from April to September, you want me to audit this much portion of the financial statement. So obviously, if you want me to do a half-yearly audit, I'll come somewhere in the month of October, and I will only check your financials from the month of April to September, right? So When I talk about scope of audit, range of activities is there, and the period means period of records that I need to check. Period of records that I need to check. Now, for example, in case of listed companies, let's say I need to do a quarterly review of your financial statements. I need to check your financial statements quarterly. So obviously I will be concerned with checking the accounts of 3 months there. So when I talk about scope, please understand two things, okay. First is what all things I need to cover in the audit, and secondly the period which I need to cover. The period, and by period I mean that what all financials, what all period, that means financials of that particular period. Let's say if it is a half yearly audit, I need to cover from April to September, okay. So this is the scope of audit, right? So having determined this, okay, let's come back to the topic, audit process. So we started with appointment of auditor, then we have determined the objective and scope of audit. I hope the two words are very clear, objective and scope of audit, okay. Alright, now the third point, let us understand the third point, okay. Now after understanding the objective and scope of audit, Divya was our auditor, so Divya is going to understand the entity. So my third point will be understand the entity, and we have to understand the entity which we are auditing. Let's say client, understand the entity client, plus at the same time we need to understand the entity, that means the client, plus we need to understand internal controls as well. We need to understand, understand the entity, rather I should write here, understand the entity client plus internal controls. Okay, now this is the third step in the audit process. The moment, let's say the appointment is done, Divya understands our objective and scope. Now she needs to understand our client. Okay. Now imagine a scenario. Okay. I am the management of the company. Okay. Let's say I run a coaching center, okay, and Divya was my student, okay. She learned auditing from me and she becomes a chartered accountant now. So she comes to me and she tells me, sir, I have learned auditing from you. I know auditing very well, sir. Please give me auditing work of your institute. Okay, I tell her that, okay, from this year you do the auditing, no problem. Okay, so she comes. Let's again visualize a scene that I am sitting at the desk and Divya comes and she's across the desk here. Okay, and she asks me for the financials of my institute. Okay, so I hand over the financials to her and she goes through the financials. Okay, she's going through the financials and then she randomly asks me, sir, everything seems to be okay, but I cannot see raw material. What about raw material, sir? Okay, now imagine, I am also a CA, I also have a bit understanding of auditing. Now imagine if a CA comes and in a coaching center, she asks me, how about raw materials? Where are the raw materials? Okay, obviously my trust, my confidence in her will obviously go down. Probably I reply to her that if in any other coaching institutions you have found any kind of raw material, do let me know. I'll also start keeping raw material in a coaching center. Please tell me what raw material can we have in a coaching center? Does any coaching center have raw material? The answer is no. We at max, what do we have? We provide service. At max we will be having inventory of our study material and all. What raw materials are you talking about? So if this is the question she asks, obviously my trust, my confidence in her will go down. So it is obviously always better that before we start with the auditing, have a good understanding of the entity, have a good understanding of the client. Okay, let me take one more situation. Okay, now let's say Ashwin Kumar is the auditor. Ashwin is the auditor. Okay, I am a software development company. So Ashwin comes for the auditing. Again, he asks me for the financials. I hand over the financials to him. Okay, he's going through the financials. He tells everything seems to be fine, but I cannot see any fret outwards. In the financials, I cannot see any fret outwards. Now, if the auditor will ask such kind of questions, I being a software company, obviously my trust in the auditor is going to go down. Okay, I am a software company, I deliver the software. Do I need a thela or a truck or something or an auto rickshaw to deliver the software? How can you ask me freight outwards in case of a software company? I generally give the software, I upload it on the cloud and they download it. That's it. There is no freight outward in software company. So but if the auditor somehow they ask this type of question, obviously I from the management perspective, my trust in them will go down. So it is always better to understand the entity, understand the client before you actually start with the auditing work. Okay. Now, one more example. You accept the audit. You understand the objective and scope of audit, and you very happy. You are first audit you have got. You straight away go to the client's place. Okay. Now they give you the financials. You ask for the financials. They tell us yes, the financials are in the system. Then you very happily you log into the systems only to realize that their entire financials is developed in an ERP, SAP. They are using SAP, and the moment you hear the word SAP, you go like this. You don't know anything about SAP. You don't know how to check the financials on this SAP. Okay. So now will you tell the audit? Will you tell the management, sir, I cannot do the audit? They'll ask you why? Because I don't know SAP. So why did you accept the audit when you don't know SAP? So that is why, let's say, you need to have an understanding of the client. You need to at least know whether the client is a manufacturing entity or a trading concern, what kind of softwares they are using, will I be able to handle their work or not, okay, what kind of industry they belong to. All these things you need to know, and all these things, we haven't yet started with the audit yet. This is the preliminary part. I have not written any step yet wherein we have started the audit work. We have not yet started the audit work. Okay. All right. So point number 3 has got 2 parts: understanding the entity, the client, as well as the internal controls. Okay. Now in the previous session, I did tell you that as an auditor, we need to assess the internal controls of the client, right? Can anyone answer why do you think we need to assess the internal controls of the client? What was the reason? What is the reason why we need to assess the internal controls of the client? Yes. To know the extent of workload. Okay, this is what you have jumped directly to the conclusion, but ultimately why do we check internal controls? Why do we assess the internal controls? To determine what? Yes, Divya, you are absolutely right. Risk of material misstatement. Okay, now we just assess the internal controls. Now how do we assess? Now let's discuss it practically. Okay, now let's say I am the auditor this time and the management person is sitting this side. Okay, so I haven't started the audit yet, but I just went to their office to discuss few things. Okay, so when I was discussing things with them, they gave me an assurance that their financials are free from misstatement. They have amazing controls in place. Okay, they told me that they do, let's say, the bank reconciliations of timely, so there cannot be any mistake in the bank and the cash balance. They told me n number of controls which they have in place in the organization to ensure that the financial statements are free from material misstatement. So during the discussion, I framed opinion in my mind, a notion in my mind that okay, this organization is very basically concerned with mistakes in the financial statement, and hence they have implemented so many controls. So casual discussion with the management, I got to know that yes, I haven't checked the controls yet, but I got to know that yes, they have good internal controls. So at the back of my mind, when I know that yes, their internal controls are good, what is the thing that is going to come in my head next? If their internal controls are good, the chances of ROMMS, the ROMMS is chance only. If the internal controls are good, ROMMS would be, if the internal controls are good, risk of material misstatement would be less. Okay, so point number 3 in the audit process, point number 3 and 4 are somehow related. We do it together. If you see, the point number 4 is basically assessment of, you need to assess ROMMS, basically the risk of material misstatement. So these 2 points are related. We have an understanding of the internal controls, and then somehow we are able to assess, okay, in this organization the chances of misstatements in the financial statements is relatively less. Okay, now having up till this point, okay, we have determined the risk of material misstatement. Now we have roughly assessed, let's say, risk of material misstatement. Now if let's say the risk of material misstatements that we have assessed is, let's say, low. Okay, now what impact will it have in our auditing? What impact will this have in our auditing? Yes, if I assess that the risk of material misstatement is low, will it impact our auditing in any way? Yes, how? It will be easy to audit. Now my extent of audit will be less or more? Workload will be reduced. My extent of work would be reduced. Okay, Okay, right, exactly. So on the basis of ROMMS, you have just assessed the ROMMS. What we do next is, fifth point is, we do the audit planning. We do the audit planning. Audit planning. Now, see, whenever we go for an audit, we just don't start audit randomly. Okay, we form a proper plan sitting at our office. We form a proper plan. Okay, in the planning part, I discuss who is going to go to the audit, which article needs to be sent to the audit, how many articles are going to go to the audit, how many days they should probably take to complete the audit, what all things they need to check in the audit. All this planning is done. Okay, all this planning is done. Now, assume, please try and understand, obviously this planning, don't you think it will be based on this risk of material misstatement? If let's say we assess that the risk of material misstatement is very high, now in my planning part, don't you think the extent of work which I will be doing in the audit, will it go up or not? The extent of work which I will be doing during the audit, will it go up or not? Yes, it will go up, right? So don't you think how we assess our ROMMS, let's say it can be high or low, obviously it is going to have an impact on the planning. We are going to plan accordingly. If let's say ROMMS is high, my planning would be very extensive. I would include a lot of things to be checked in my planning phase. But let's say if the ROMMS is low, probably I will exclude some of the things, because I know, let's say the financial statements are, the chances of misstatement is very less. So my planning will not be very extensive. Are you able to understand this point? Yes? Right? Okay. Now, yeah. So, see, this happens in a practical life also, no? Most of you, because the exams are coming right now, you must have made plans also for your examination. You must have made a schedule for your study schedule basically, right? But obviously, you make your study schedule on the basis of some kind of risk. Let's say you fear that in EISSM, the chances of you failing is very high. Probably, you will consider that and you make a plan. Right? So in your plans, let's say probably if you think that yes, the chances of me failing in EISSM is high, so probably if this is the case, you would include EISSM every day in your plan, right? So obviously when I'm talking about your study plan, when you consider risk, right? In auditing also, obviously when the risk is very high, we are going to make our plans more extensive. And if let's say the risk of material misstatement is not very high, my planning would be less extensive. Okay, so what do we do in planning? Okay, ROMMS I have already discussed the word, but still let me discuss it once again. ROMMS I have already discussed. What is ROMMS? This is risk of material misstatement. I told you this in the previous session, that the risk of material misstatement refers to risk that the financial statements are materially misstated and do not present a true and fair view. So financial statements are materially misstated and they do not present a true and fair view. The chances, the probability of financial statements being misstated, this is known as risk of material misstatement. Now, let us start with the word audit planning. Audit planning. What is audit planning? See, audit planning is required for an auditor to conduct an effective and efficient audit. Why do we need to do a planning beforehand? So that our audit is effective and efficient. Our audit is effective and efficient. Okay. Obviously, just answer this simple question, that audit planning, will I do before auditing or during auditing or at the end of the auditing? This planning portion, do I need to do before I start the auditing? Yes or no? Before the start of auditing, obviously, before the start of auditing, we make a proper plan that these are the areas we need to check. These are the persons who are going to go for the audit. Yes, Ram, please. Yes. Material means something which is of significance, which the auditor determines that this is a significant item in the financial statements. In the later stages, we are going to understand how do we determine materiality, what amounts to material. We'll discuss this. Okay. So let me give you an example. If you have just asked this question, that let's say I am doing an audit of Reliance Industries Limited. Their balance sheet runs in thousands of crores. Okay. Now, If I do the auditing, I would not be concerned with, let's say, small petty figures of 3 lakhs, 2 lakhs, 1 lakh, 5 lakhs. Okay. So before I start my audit, actually in the planning phase, in this very planning phase, I determine a level which is known as the materiality level. Now let's say I have determined the materiality level of 5 crores. Okay. I believe anything above 5 crores in this particular entity is a material thing. Anything below 5 crores is not material thing. Okay. Depending on the magnitude of the financials. So I'll not be checking anything, let's say, below 5 crores in this particular case. So materiality level is what? 5 crores. So there are ways in which we determine materiality level, and again it may differ from auditor to auditor. Okay, one auditor may feel that the materiality level should be 3 crores. The other auditor may feel it should be 5 crores. So we are going to come to this. Don't worry about it. Okay. Yeah. All right. So now coming back to the planning topic, audit planning. It says audit planning is required for an auditor to conduct an effective and efficient audit. We need to plan things in advance so that our audit is effective and at the same time it is efficient. Now, please tell me, what is the difference between effective and efficient? What is the difference between effective and efficient? Yes, Ramji, please. Yes. Oh. Using the resources. Okay. Yeah, to some extent you are correct. So management of limited resources. Exactly. So now during audit, let's say I am an auditor. Okay. What all resources do I need to manage? You are the client. You are going to pay me fees of, let's say, 25,000 for the audit. But what all resources do I need to incur? Any expenses for conducting the audit? As an auditor, do I need to incur any expenses? What will be the resources in the case of audit? What is the most crucial resource? The most crucial resource is time. Okay, and obviously I will be having some articles and all in my office. The staff, I pay them salary and also I need to use them optimally. Okay, so please understand the scenario. Let's say when I say audit planning is required for an auditor to conduct an effective and efficient audit. Okay, now first understand the word efficient. Let's say I am getting 10,000 rupees fees for one audit. Please understand this. Okay, 10,000 rupees as fees for one audit. Okay, now I sent let's say two article assistants to do the audit. Okay, and let's say I pay them, or let's say 3 articles. I sent 3 articles. Okay, and they took 30 days to complete the audit. Okay, all right. Now the stipend which I pay to the articles is, let's say, 3,000 per article. 3,000. Okay, now at the end of the month, if I calculate, these 3 articles were totally involved in the audit of this client who is paying me 10,000. Now, do you think this audit is cost effective for me? I will end up paying them 9,000 rupees, 3 articles, and in return I am only getting what? 1,000 rupees. Okay, so please understand that obviously we generally don't, the volume of work doesn't depend on the fees that we are getting. Okay, but what I'm trying to tell you is that we have to manage our resources efficiently. Now if, let's say, the work is not very, the volume of work to be done here is not very high. Okay, so there is no need to send 3 articles for 30 days there. We have to plan in such a way that we are able to complete it in an efficient manner. Right? If I do this, probably my other work will also get impacted, because these articles, let's say, if they are occupied in one particular audit, obviously they'll not be able to start the other audit work. Okay. So when I say effective and efficient, now please understand what happens. When I say efficient audit, I need to complete, see, when I say first effective audit, effective means my audit, the opinion which I give has to be correct. The opinion which I give has to be okay. Like for example, if there are misstatements, I cannot say that the financial statements are giving true and fair view. You have to come up with a correct opinion. That means you have to be effective. Okay, the audit has to be effective. And when I say efficient, this means now in order to be effective, you cannot take 3 months to complete an audit. You have to be efficient also. Now for example, if I put it in very simple terms, you make your study plan. Okay, as per the plan today, as per your schedule for the day, let's say you had allocated 3 hours to complete one topic, 3 hours to complete one topic, okay, you took 9 hours to complete the topic, you took 9 hours, that means, okay, ultimately you completed the topic but you took 9 hours, that means you are effective but you are not efficient, because you are supposed to complete it in 3 hours but you have taken 9 hours. No doubt the result is fine, you have at the end of the day, let's say, completed the topic, but again, you cannot, some of the because you took 9 hours, obviously some other subjects will be impacted. So in your practical life also, we have to be both effective and efficient. Okay, now again, if I tell you, please understand this. Okay, effective basically is the outcome, effective basically is the outcome, and efficiency is basically how you reach the outcome. So we plan an audit so that we are able to give the correct opinion, and obviously by managing our resources in the best possible manner. Okay, so that is why planning is required. Now again, if you get confused with this, please understand it in this way, that let's say I order for a pizza. Okay, I order for a pizza, they assured me 30 minutes delivery. Now but it took them 8 hours to deliver the pizza. It took them 8 hours to deliver the pizza. I can say that yes, they are effective. They gave me hot pizza only, no problem. They are effective, but are they efficient? The answer is no. They took, rather than taking 30 minutes, they took 8 hours. Okay, but let's say, take a second case. Okay, I ordered for a pizza. Okay, after 30 minutes, the Swiggy guy comes, but he comes up with a, instead of pizza, he bought me a pasta. Now, are they effective? Outcome. They are efficient, but will this efficiency matter? Yeah, so the combination of effectiveness and efficiency has to be there in your practical life also, in case of auditing also. That is why we need to plan things. We need to plan things. Okay. Now, when I talk about audit planning, see what all are written here. Target of audit planning should be the following. Should be about following: budgets, time and budget. We need to understand. I told you this, time and budget. Recruitment of audit staff. Whom do we have to recruit? Whom do we have to send to this audit? Okay, let's say there are 3 new articles. I cannot send all the 3 new articles to one audit. I need to ensure that one senior article assists the newbies. Okay, so that he is more experienced, he teaches them also. So all these things I have to manage. Okay, schedule about the date of audit procedure, which work will be done when. Okay, now let's say I want to check their inventory also, so I need to schedule it. Okay, that okay, I will be checking your inventory on this and this date. So audit planning is basically about what? Time, budget, staff, schedule about the date of audit procedure. Audit procedure means what work. This is the next word which we are going to discuss. Audit procedure means the kind of work that you are going to do. I'll just give you examples of it, you'll understand. Okay, so coming to the audit process topic again, we have come halfway to point number 5. Up till now, please understand, the audit work has not yet started. Okay, we have just planned the audit. Okay, but I just want to ask you one question here. Even all of you answered this, that audit planning is done prior to audit, no doubt about it. Okay, but understand this point. Let's say, as per this plan, I have started the audit work. Okay, I made this plan. I basically had, let's say, assessed an ROMMS, and accordingly I made this plan. Okay, but once I start auditing, I find that whatever internal controls management has discussed with me, okay, it was merely a discussion. Nothing is in place. When I actually start auditing, I get to know that whatever internal controls management was talking about, it is nowhere in existence. Okay, they just told me that the internal controls are there, but it actually doesn't exist. Now, please tell me, will my ROMMS revise or not? My ROMMS will change. Now, my ROMMS will be high or low? High. So accordingly, do I need to make changes in my plan also or not? Yes. So the basic thing that you need to understand is, it is of course that the planning is done before the audit starts, but during the audit also, as and when the audit proceeds, there might arise certain circumstances because of which the auditor might have to change the plans also. So audit planning can be changed in the execution stage also. You just remember this point, okay? And don't worry if you are not able to grasp all the concepts now, because for each of these topics that I am discussing, objective on scope, you are only going to discuss about objective and scope in chapter number 1. Internal controls, we have another chapter. ROMMS, we have a separate chapter. Audit planning, altogether a separate chapter. So the entire audit process, I am only discussing with you the sequence of audit. And Very surprisingly, the sequence is nowhere discussed in our ICI material. They have just started with the chapters. So that is why I thought that no, this is a basic thing which you all should know before we actually start with our subject. So that is why I incorporated chapter 0, the fundamentals. Okay, and let's continue with this. All right, so audit planning is done. Now I know what all things I have to check, when I have to check, who is going to be checking. This is what you mean by audit planning. Now planning is done. Now what is the thing that we actually going to do? Okay, you all know that, see, it is really easy for us to plan our studies, okay, but what is the most difficult part? We are amazing, we are awesome in planning our studies, but what is the most difficult part? Implementation. Okay, so we are experts, we are super experts in planning, but when it comes to implementation, we obviously you know what your condition is, right? I don't need to tell you. Now all right, so after planning is done, then comes the main work. Okay, so next is perform audit procedures. Now what do you mean by audit procedures? Okay, let us understand this term. What is audit procedure? Come back to the topic here. Yes, we have the topic audit procedure here. Okay, now let's read the definition first. Audit procedures are processes, techniques and methods. It can be any process, technique and method that auditors perform. Some things which auditors perform to obtain audit evidence, so that they obtain evidence relating to an item in the financial statement, okay, which enables to make a conclusion and express an opinion. A very big definition. Let me repeat it again. What is audit procedure? Audit procedures are processes, techniques and methods that the auditors use. Why are they using all these methods and techniques? So that they are able to obtain something which we call as audit evidence, and because of these evidence they will be able to draw conclusions and express opinion. Okay, now this is just a definition. Probably you must have understood nothing, but let us understand again practically. Okay, now let's say you go to an organization to audit, and this is the balance sheet. They have an item in the financial statements, let's say land and building, and the value is 5 crores. Okay, let's say Ashwin and Divya, they have gone for audit, and they have an item of financial statements to be checked, land and building 5 crores. Okay, now think from the perspective of an auditor. You are the auditors now. You have to think practically. What all things will you check to verify this land and building is of 5 crores? What all things do you think can be done? I want answers from you. Let me see how much you can think about auditing. What all things can be done? Please answer. We want to verify whether this land and building of 5 crores is really there. Its value is 5 crores, whether the building is there or not. What all can be done? Please answer. Okay, one at a time. Ashwin, yes. Physical existence and stamp value. Okay, great. Now he has given two basically aspects that needs to be checked. First, he told that the land and building, if the company is mentioned, they have mentioned, let's say XYZ Private Limited, they have mentioned land and building worth rupees 5 crores. We need to physically check whether the building really exists or not, whether the land really exists or not. So I tell the management, let's say I am the auditor, I tell the management, I need to see physically your land, the building. Okay, the management tells me, this is the building, the place where you are sitting, this is the building, check it. Okay, so I just go, I see, okay, the building is there. I take a round around the building, and okay, the building is there. Okay, so what I have just done is, I have done something which I call it as physical verification. I am calling it as P1. P means procedure. I just applied a procedure. What procedure did I apply? I checked the building physically. Okay, but do you think that just by merely checking the building, whether the building exists physically or not, is it sufficient to say that the land and building is XYZ's Private Limited's and the value is 5 crores? Is it sufficient? If this would amount to something which let's say if you think that this is sufficient, probably anyone would ask you to go and see Taj Mahal and they'll say that this Taj Mahal is mine. Right? So physical verification alone will not give you sufficient evidence, right? So no doubt it gives us Yeah, we need to verify the documents also. No doubt it gives you an evidence. It is giving you an evidence that yes, the building exists, but you need to verify some other things also. So what is the second thing you feel is the most important aspect that we need to ask from the client? The date on which they acquired the asset. Okay, how do you think are you able to, can you verify this? So through the documents. Okay, for land and building, let's say if you have an asset, if let's say what document generally will you be having, what document will you be having the possession of? Registry documents, exactly, Divya. So generally in case of land and building, we can call it as title deed. Title deed, the registry document, the sale deed, whatever, by whatever name you call it, the title deed means, okay, I want to see, you have shown me the building physically, very good, but I want to see whether the building is in your name or not, whether it is in the name of XYZ Private Limited or not. So I'll see the title deed, I'll ask them to produce me the title deed. Okay, so checking the title deed is applying basically another procedure. I just applied another procedure, I check the title deed. Okay, now let me just ask you something. I asked them for the title deed, and they have produced me a photocopy of the title deed. Will you be satisfied with the photocopy of title deed? Think very practically. Shilpa, reason. Why will you not be satisfied with the photocopy? Duplication. Okay, all right. So generally in all these cases, we generally ask for the original. Why? Let me give you a simple example. Okay, now let's say we are auditing for 2019 and 20. Okay, they produce a title deed, they give you a photocopy of it. What if, let's say, it might so happen also that XYZ Private Limited, they sold this land and building to another company, ABC Limited. Okay, and after selling it, they have taken the same premises on rent. So when they show you that this is our building, okay, that building might have been taken on rent also. And probably, yes, they were the actual owners, let's say 2 years, 3 years down before, but they sold it to ABC Limited. But if they show you the photocopies, they might show you the photocopies of the original title deed. Sorry, but now the title deed belongs to whom? ABC Limited. And if they have sold the building to ABC Limited, should this figure come in their balance sheet? Should this figure reflect in XYZ Private Limited's balance sheet? No, right? So you should always be asking for originals, not the photocopies. Okay, original, the latest one, the originals. If they sell the land and building, obviously they will not be in possession of the original title deed again, because it will go to ABC Limited. But they might have kept a photocopy and they are showing you the photocopy. But this is not how things work. Okay, you need to be smart. You will ask them, I need the originals. Okay, all right. Now let's say, okay, we have verified the building physically. We have gone through the title deed also. Now title deed will help us in gaining evidence that yes, the building belongs to the company. But still there is one more aspect to be checked. How come you be sure that the building is of 5 crore rupees value? As an auditor, are you going to check this aspect? Sorry, Ramji, yes, please repeat. Stamp value, guidelines value, okay, all right. Now, okay, so as an auditor, see, we are not expert that, okay, we can determine the value of the building or the land. Okay, this has to be done by a certified valuer. So in order to see whether the land and building is actually 5 crores, the third thing which probably I'm going to ask them is for a certificate from a valuer, from a registered valuer. Okay, and if they produce me a certificate from a registered valuer that yes, this building and land is of 5 crores, I'll accept it. Okay, all right. So what I have done, please understand, for one item of financial statements, I have applied three procedures. What are the procedures? I did physical verification, then I did a documentary verification by examining the title deeds, then I was keen on knowing the valuation, so I called for a certificate from a valuer. Okay, all these three procedures I have applied. Now please understand, what are these procedures? They are going to give me what? evidence. They are going to give me evidence. When I do physical verification, it gives me an evidence that yes, the building exists. When I see the title deed, it gives me an evidence that yes, the building belongs to the company. When I see the certificate from a valuer, it gives me an evidence that yes, the building is worth rupees 5 crores. Okay. So the auditor applies audit procedure to obtain what? To obtain audit evidence. Now let's understand the definition again. Let's read the definition again. Okay. So audit procedures are the processes, techniques and methods that the auditors perform to obtain audit evidence. See, we have obtained audit evidence or not. E1, E2 and E3 are audit evidence, right? Okay. Now, yes, I have got 3 evidence here by applying 3 procedures. Now, relating to an item of statement which enables to make them a conclusion. Now, after what I am going to do, I am basically going to assess all the 3 evidence and I am going to come up to a conclusion. I am going to come up with a conclusion that yes, this land and building worth 5 crores is giving true and fair view. Is giving true and fair view. How is it giving true and fair view? Because everything, like they have rightfully disclosed land and building. This is an asset for the organization. It is of 5 crore rupees value. I have checked all the aspects. So I'll conclude that land and building is giving true and fair view. So again, I'm reading the definition here. Please understand. So audit procedures are processes or techniques or methods that the auditors perform to obtain audit evidence relating to an item in the financial statement which enables them to make a conclusion and then express an opinion. So understand, please, let me extend this aspect. Okay, now these are the procedures which I applied on land and building. Similarly, let's say I apply procedure 4, procedure 5, procedure 6 on inventory. Okay, and by applying these procedures I am going to get certain evidences, and again from these evidences I will get certain conclusions. So this is my conclusion 1, this is my conclusion 2. In this way I will keep on getting conclusions about each and every item in the financial statement, and based on these conclusions I am ultimately going to give opinion on the financial statements, whether the financial statements are giving true and fair view or not. Okay, so again let us read the definition again. Audit procedures are process, techniques or methods which auditors use, which auditors perform to obtain audit evidence, and after obtaining audit evidence, what is done? They conclude, a conclusion is drawn, and on the basis of this conclusion ultimately the auditor issues his opinion. Is this clear to everyone? Yes? Okay, now all right. Okay. Now, before again I start with the next process, next step in the audit process, I just mentioned here that what he is going to perform audit procedure. Okay. Now, after I am just going to ask you, after he performs audit procedure, what is he going to get? On application of audit procedure, what does the auditor obtain? Don't you think we obtain evidence? Yes. So yeah, I am yet to complete process number 6, but yes, on application of audit procedures, the auditor obtains something which we call as sufficient and appropriate audit evidence. We obtain sufficient and appropriate audit evidence. Now what does it mean? I'll come to it later, but just remember that the outcome of application of audit procedures is basically audit evidence. Okay, now coming back again to this topic, audit procedure, coming back to this word, yes, I want to discuss 1 or 2 more aspects here. Very important word that you are going to come across in every chapter, in fact every page of auditing. Okay, so the very important line that we have to understand is the auditor determines the nature, timing and extent of audit procedures to be performed. Very important line. Okay, the auditor determines the nature, timing and extent of audit procedures to be performed in order to obtain sufficient and appropriate audit evidence. So the auditor will determine, there are 3 words, I am going to explain the 3 words, but let us understand, let us just read the words: nature, timing and extent. The auditor will determine the nature, timing and extent of audit procedures to be performed in order to obtain sufficient and appropriate audit evidence. Okay, now what do you mean by nature, timing and extent of audit procedure? Nature of audit procedure means the type of audit procedure to be performed. Okay, now for example, in our example, land and building example, what are the types of audit procedure we performed? What are the types of audit procedures we performed? We did a documentation verification. We did a documentation aspect. Okay. Then we did an inspection also of the actual building. Okay. Then for the valuation part, again we went through a documentation. We called in for a documentation. Okay. So nature of audit procedure means the type of audit procedure that we have to apply, whether it will be documentary in nature, whether it will be physical verification in nature. All these are basically the types of audit procedure. Okay. So the auditor determines the nature of audit procedure, which is nothing but the type of audit procedure. Then timing refers to when the audit procedures are performed, when is to be the procedure applied. Okay. Now for example, you have to verify the inventory at the end of 6 months. Okay. Obviously the verification procedures that you are going to apply will be at the middle of the year. Once the 6 months are completed, you cannot wait for the year end to do this procedure. Okay. So timing also has to be determined, that when this particular procedure has to be applied. Okay. And thirdly, timing refers to when. Okay. And thirdly, extent means the quantity of procedures to be performed. Now for example, let's say I am checking the sales invoices of a company. I am checking all the sales invoices of a company. So I need to determine that how many invoices can I check? How many invoices do I need to check? Let's say there are 1 lakh invoices. Probably it will not be practical for me to check all the 1 lakh invoices. So I need to determine the extent of invoices that I need to check. Okay. So extent refers to what? The quantity of audit procedures to be performed. Quantity. Okay. So in short, if I say N refers to what? The nature, obviously, but it means the type of procedure that we need to apply. Okay. Timing refers to when the audit procedure has to be applied, and extent refers to the quantity of the procedure to be applied. Okay. Now in my example of land and building, what is the extent of procedures that we have applied? How many procedures we have applied? In this example of land and building, how many procedures have we applied? How many procedures? P1, P2 and P3. Are there 3 procedures or not? So it is upon the auditor to decide whether he is satisfied with 2 procedures, or he wants 3 procedures, or he wants more procedures. Okay. The point here is, please understand this line. The auditor determines the nature, timing and extent of audit procedures to be performed. So he is going to basically determine the nature, timing and extent of audit procedures to be performed. He is going to perform more and more procedures unless he obtains sufficient and appropriate audit evidence. So the ultimate objective of applying procedures is to obtain sufficient and appropriate audit evidence. You have to understand this. Okay. Now, please understand what amounts to sufficient and appropriate audit evidence. Okay. I told you this, that the auditor will perform audit procedures, and by applying audit procedures, he wants to obtain sufficient and appropriate audit procedure. Okay. Now, let's understand the 2 words. I told you this, that audit evidence, it has to be what? Sufficient as well as appropriate. Now in my example of land and building, how many procedures did I apply? 3. Okay. So sufficiency is basically how many evidences you have obtained. When I talk about sufficiency, it basically means quantity. Had I done only physical verification of the land and building, would it amount to sufficient audit evidence? Do you think it is sufficient? If I do only physical verification of the land and building, no. It is this. Doing physical verification will only help me in getting evidence with respect to the existence of the building. I am nowhere able to determine the value, whether the value given by the management as 5 crores, is it correct or not. So if I do only one procedure, probably it might not be sufficient. Okay. So when I say audit evidence has to be sufficient and appropriate, by sufficient I means the quantity, and by appropriate, obviously I will be meaning what? The quality. Would you accept photocopies of the title deeds? If they produce you the photocopies, that means, okay, it might be a sufficient evidence, but it is not an appropriate one, because it is not of high quality evidence. You have just obtained photocopy, and I told you what can be the consequences of accepting the photocopies, right? So please understand, auditor will apply procedures. The auditor is going to determine the nature, timing and extent of procedures so as to obtain what? Sufficient and appropriate audit evidence. He applies procedures so that he is able to obtain evidence. Is this clear to everyone or not? Right? Okay, don't worry. Again, for audit evidence, only for audit evidence we have a huge chapter, almost 10 standards we are going to understand for audit evidence. Okay, I am just giving you the basics now. Okay, so all right, coming back to the audit process, the auditor will perform audit procedures and then he is going to obtain sufficient and appropriate audit evidence. Right? Now let us quickly understand what audit evidence means. Okay, so yes, we have one more point here, audit evidence. Let us quickly understand the word audit evidence. Now, evidence obtained by the auditor. What is audit evidence? Evidence obtained by the auditor to substantiate any financial information by applying audit procedures. You all know now that by applying audit procedures, the auditor is going to get what? Audit evidence. So application of audit procedure results in getting audit evidence. Okay, so evidence obtained by the auditor to substantiate any financial information. Substantiate any financial information means whether whatever management has written, for example, land and building 5 crores, is it correct or not? They are going to substantiate this thing, okay, by applying audit procedure. Now, you all know that auditors have to keep on applying procedure until and unless they obtain sufficient and appropriate audit evidence. So the next sentence is, the auditor should obtain sufficient and appropriate evidence which enables the auditor to arrive at a conclusion and support his opinion. Okay, and I told you this, that sufficiency of audit evidence means what? Quantity, and appropriateness means what? Quality of the evidence. Quality as in its relevance and reliability. How reliable the evidence is. And photocopies, we all know it is not reliable. Hence, the quality is not very high. Okay, so as an auditor, always be concerned with the fact that you have to obtain sufficient and appropriate audit evidence. Very important word. Every second page in auditing you will find this line, that the auditor applies audit procedure. The auditor determines the nature, timing and extent of audit procedures in order to gain sufficient and appropriate audit evidence. Okay, so what is NTE? Nature, timing and extent. By nature I mean what type of audit procedures do I have to apply. By timing I mean when do I have to apply the audit procedures. And by extent I mean how many procedures, the quantum of procedures that I need to apply. Okay, alright. Now when you obtain audit evidence, I told you this also, that when we obtain audit evidence, okay, we apply procedures, and on the basis of this procedures we have obtained evidence. Now out of all the evidence that I have obtained, I will draw some conclusions. So my next process will be, I will be drawing some conclusions. Okay, so first let me complete the audit process. Okay, we are moving now towards the end of the process. Okay, point number 8, obtain sufficient and appropriate audit evidence. Okay, after obtaining evidence, what I am going to do, I am going to basically analyze all the evidence and I am going to draw conclusions. Okay, and once I draw all conclusions, okay, finally what I am going to do is, I shall form an opinion, and obviously I am going to express the same, where? In audit report. And express the same in audit report. So this is how our audit process will end. Okay, so what I have done, I have applied procedures, I have obtained sufficient and appropriate audit evidence. On the basis of all the evidences I have obtained, I will draw certain conclusions. I will draw conclusion for land and building, I will draw conclusion for inventory, I will draw conclusion for debtors, I will draw conclusion for cash and bank balances. Now when I draw conclusions for each and every item of the financial statement, then only I will be in a position to say whether the entire financial statement is giving true and fair view or not. Okay, so accordingly, on the basis of the conclusions which I draw, I'll form an opinion, and obviously I'm going to express this opinion in my audit report. Okay, alright, so what do you mean by conclusions and opinion? Let us go through it again. Opinion word we have already discussed. Let me discuss the word conclusions. Okay, now conclusions are drawn by the auditor. It is drawn by the auditor on the basis of the sufficient and appropriate audit evidence they have just obtained. So from the above step, after applying audit procedure, the auditor is going to get audit evidence, and then from all the evidences obtained, he is going to draw certain conclusions. And after drawing all the conclusions, he is going to jot down the entire thing in the form of an opinion in an audit report. Okay, opinion I have already discussed, but if you still want me to cover that up. It is on page number 2. Opinion means one's point of view towards any given fact. So auditor is going to give his opinion on the financial statements, whether it is giving true and fair view or not. Okay. Now, our audit process topic is over, but yes, I still need to discuss few aspects, but I believe all of you have drawn this in your registers. Have you drawn this or not? Yes. Okay. So we have 9 steps in the entire audit process. Okay. It can be 10 also, it can be 8 also in some cases. Some experts will say that yes, internal controls assessment, they'll put it as another step, next step, but okay, it's okay. Okay. Ultimately, these are the basics that we have to do in any auditing. Now, coming to the topic of very important topic again, form an opinion. Okay. Now, we are going to discuss now the various types of opinion, which an auditor can give in his audit report. Various types of opinion which the auditor can give in his audit report. Okay. So now there can be 4 types of opinion. Please understand this. Let me write the names first. You can copy it also. There can be 4 types of opinions. Now, first opinion will be unqualified opinion. Unqualified opinion. Okay. Then we have qualified opinion. Then we have disclaimer of opinion. And finally, we have adverse opinion. 4 types of opinion the auditor can give. Now, let me explain you each and every opinion with the help of some examples. Okay. Now, the auditor, he applies audit procedures. On application of audit procedures, he obtains evidences, okay, and then he concludes regarding each and every item of financial statement. Now, let's say I'm auditing the financials of XYZ Private Limited. I have obtained evidences, I have drawn conclusions that each and every item of the financial statement which the management has given to me, the financials are prepared by the management, each and every item is giving true and fair view. That means the entire financial statements they have made as per the FRF, okay, and there is no misstatement, material misstatement in the financial statements. Okay, if I want to give such kind of opinion, I'll say that the financial statements are giving true and fair view. This implies that I have given an unqualified opinion. This implies that I have given unqualified opinion that the financial statements in entirety as a whole, it is giving true and fair view. That means each item of the financial statement is giving true and fair view. I have not put in any restriction. I have not put in any reservation. All items of the financial statements are giving true and fair view. Fine. You have any doubts? Sanjay, Divya? Sorry? So, negative? What about others? Stuck? Okay, let me restart it. Okay. Okay, is it okay now? Divya, colored or black and white? All right, okay. Okay, fine, great. Okay, so unqualified opinion, I told you this, when the financial statements are giving true and fair view, when each of the items of financial statements are giving true and fair view, we'll say that the financial statements are giving true and fair view. Okay. No restriction, no condition here. We say that entire financial statements, it is giving true and fair view. Now, coming to the qualified opinion. Okay. Now, qualified means you put certain restrictions. You put in certain restriction or you put in a qualification. Now, for example, let's say entire financial statements of a company I have checked. Only inventory they had valued as per LIFO rather than FIFO or weighted average. Only the inventory item of the financial statement they have valued as per LIFO, which is not as per the FRF, which is not as per the financial reporting framework. Now, that means there is a misstatement, but the misstatement is only in one item, which is inventory. Now, since the misstatement is only in one item, I cannot say that the entire financials is not giving true and fair view. I cannot say that the financial statement is not giving true and fair view. Only there is a mistake in one item, right? So what I'm going to do is, I'll put in my words, I'll give an opinion in this manner, that the financial statements are giving true and fair view, except for the item of inventory. Except for the item of inventory, which has been valued at LIFO method. Are you able to understand this? I'll not, just because one item of inventory has been misstated, let's say, or it has been valued as per LIFO, I cannot say here that the entire financial statements are not giving true and fair view. So what kind of opinion I'm going to give here? I'm just going to insert a restriction here, that yes, the financial statements are giving true and fair view, but subject to the item of inventory, not subject, except for the item of inventory which has been valued at LIFO by LIFO method by the management. So what I have done here is, what is the difference between these two? In both the cases, are the financial statements giving true and fair view or not? I want everyone's attention in this matter. Yes, in both the cases, are the financial statements giving true and fair view or not? Yes or no? Yes. But what is the difference in this second opinion? What I have done, I have just inserted one restriction, one qualification. Hence, the name of this opinion is what? Qualified opinion. Is this clear? Now, generally students tend to get confused, okay? They generally they basically interchange the concept. They think, okay, unqualified means that something is wrong and qualified means everything is okay. Please be aware that qualified means we have inserted a qualification, a restriction. Qualification means a restriction, a conditional aspect we have mentioned, that's except for the item of inventory, the financials are giving true and fair view. Fine? Okay. Now, third type of opinion is disclaimer of opinion. Okay. Now, let's understand it again. I go to a client's place and he gives me photocopies of his books of accounts. Okay. How do you think I'm going to audit? How do you think I'm going to believe on the photocopies? So, when I ask him, what about the originals? Where are your books of accounts? He tells me that last month, the income tax department, they conducted a search operation at our premises, basically a raid, okay, and they took away all our books of accounts. So it is in the custody of the income tax department. I told, okay, now that the books are in the custody of income tax department, how am I going to audit? So they tell me, sir, no, we have got the photocopies. You can do the auditing through the photocopies and give your report. Okay. I tell them, no, it is not possible for me to rely on the photocopies. I give them a solution. I tell them that you go to the income tax officer. Okay. If you have the photocopies, ask him to certify, at least write that they are true copies, certified true copies. Okay. Or ask them to at least give the photocopies, latest photocopies of all the books of accounts that they have seized, okay, and obviously with a sign and seal. So this staff goes to the income tax department office. The income tax officer scolds him and tells him, this is not my duty. I cannot give you the photocopies now. I have a lot of work and all. So he comes back empty-handed and he tells me that they are too busy, too occupied, and it is not possible to do photocopies of this book, this many books of accounts. Okay. So in this scenario, what do you think? How do you think? Will I be able to apply procedures on the photocopies? And will I be able to obtain sufficient and appropriate audit evidence here? Will I be able, and since I'll not be able to obtain evidence, I'll not be able to draw conclusions. So the point here is, disclaimer of opinion means that you were not in a position to basically obtain evidence. When you are not able to obtain audit evidence, obviously you are not going to give an opinion that the financials are giving true and fair view. You are going to disclaim your opinion. By disclaimer, you will write something like this, that we were unable to obtain sufficient and appropriate audit evidence, and hence we are not in a position to give an opinion on the financial statements. Are you able to understand this? Is this clear to you or not? Everyone, please respond. Yes. So in case of disclaimer, we have not obtained sufficient and appropriate audit evidence, hence we are not giving any kind of opinion here. We disclaim our opinion. We write it that we are not in a position to give any opinion. Fine. Okay. Now coming to the fourth point, adverse opinion. Okay. Now let's say I go to a client's place and I start asset wise. Okay. I ask him for land and building. Okay. So first item which I want to check is land and building. I told him, let's show me your land and building, show me your building. So he tells me the building in which you are sitting right now is our building. Okay, I see it physically, it is there. Okay, then I ask them for the title deed. Okay, so he gives me a photocopy of the title deed. I ask him for the originals. He says, sir, the original is in the court of law. I tell him, why is it in the court of law? Sir, actually this is a disputed property and we are the case is pending in High Court or Supreme Court. I tell them, Supreme Court, the case has reached to such a level that the petitioner or the appellant, they have reached to the Supreme Court. He says yes. Okay. So I ask him, what are the chances of you winning the case? So he says, sir, we have reached, sir, we have lost in High Court and probably we are going to lose in Supreme Court also. Okay. So we don't have the title deeds of the documents now. Okay. I say, okay. Then, so was I able to obtain sufficient appropriate audit evidence here? I was able to obtain, but they say that the title is not there in their name. It is a disputed property. This is a disputed property. Still, it has been shown in the land and building. Okay, so this is basically a misstatement. Okay. Now coming to the next aspect, let's say I talk about debtors. Okay, I see that they have one debtor of 5 crore rupees. Okay, and who has not paid since a long time. Okay, so I ask them, who is this debtor? What arrangements did you make to basically get payment from the debtor? So I told them, what have you done to basically take payment from the debtor? So they tell me that, sir, this debtor, we only did one transaction with him, and since then he has fled away, and we don't even have his phone number and address. So I tell them, how can you even do a transaction without obtaining the details of the debtor? You don't even have the address and the phone number of the debtor, and you gave him goods on credit worth rupees 5 crores. How can you do this? Okay, so they are not giving me let's say the details of the debtors also here. Okay, this can what can they must have done is, the debtor actually doesn't exist, but they must have inflated their sales, and obviously when they inflate their sales, they have not received any cash, so they have increased the debtors. Okay, all right. Now again, let's say I tell them, okay, you have so much of investments. They say yes. So for checking the investments, let's say they have shown investment in shares. What document will I be asking them? For checking investment in shares, whether the company actually has so much of investment in shares of other companies, what is the document that I can ask them? Share certificates. Okay, but these days, because all the shares are in the form of DMAT, in DMAT form, what can I ask them? I can ask them for a DMAT statement, wherein all the shares which they have in their DMAT account will be reflected. Okay, so I told them, give me your DMAT account statement, or if you have share certificates, whatever. So they did not give me the DMAT account statement. So I asked them, why are you not producing the DMAT account statement? So they tell me that, sir, we have not paid brokerage to our stock broker, so he is not giving us DMAT details. So I tell them, how did you not pay brokerage and you have bought shares? Sir, we did not pay. Okay, all right. So in this way, I see that they are giving vague answers. They are not giving any proper documents for me to understand. Then I come to the credit part also. I see that they have taken a loan from a bank worth rupees 2 crores, let's say. Okay, so I tell them, okay, produce the loan documents. They say it is a secured loan. Okay, I ask them, what property, what did you pledge basically to obtain this loan? They say this building, sir. I tell them, how can you do this? This building is disputed. You yourself are not sure whether you are the owner or not of this building, and you have pledged the documents of this building in the bank and obtained the loan. Then the manager, he smiles and he tells me, sir, see, our position is not that great. You must have known by now, the building, no doubt it is not in our name, okay, but because it is in our position now, till the time it is in our position, let us enjoy the building, okay. Obviously we are going to lose the case and the building will no longer be ours, but because it is in our position, you can assume this is my building. He's giving such kind of answers, okay. Then regarding the loan, he tells us, I asked him, if the building is not yours, how do you think you are going to repay the loan? Sir, he tells me that, sir, we are a small company. People like Vijay Mallya and Nirav Modi, they have taken so much amount of loan and they have escaped. We also have a plan, sir. You don't worry about it. This kind of answers he is giving me now. For each and every item of balance sheet, there is some problem, some issue, okay. Nothing is basically true and fair here. So in such kind of scenarios, okay, I cannot say that the financials are giving true and fair view, subject to land and building, subject to inventory, subject to investment, subject to debtor, subject to loan. I cannot write it in this way. Almost everything has some issues or the other. Everything is, let's say, misstated. So in this case, what kind of opinion I am going to issue? I am straight away going to say the financial statements are not giving true and fair view. Are you able to understand this? So in adverse opinion, I'll say that the financial statements are not giving true and fair view. In both the scenarios, I say that the financial statements are giving true and fair view. Here also I say that the financial statements are giving true and fair view, but along with it, I add a restriction and qualification. Okay. In this case, I am not in a position to give any opinion. I have not obtained sufficient and appropriate audit evidence. So I cannot give any opinion in this case. SAAE means sufficient appropriate audit evidence. Okay. And in this case also, I'll clearly say that the financial statements are not giving true and fair view at all. Okay, are you clear with all the four opinions? These are the four. Yes, Sitaram, please tell me. Unqualified means everything is correct, true and fair view. Can he escape? Okay. All right. A very, very good question. He is asking that, let's say it was a case of adverse opinion, but the auditor gives unqualified opinion. Will he be able to escape? As in, will he be able to save himself? Okay, because he has signed and he has said that that the financials are giving true and fair view. Okay, a very good question. Now the point here is, see, when I say he has given his opinion, that means that yes, opinions can differ, okay, but this auditor, he will be able to save himself only if he is able to produce certain things that he conducted the audit as per the standards on auditing. This is a question which you have asked now, but an appropriate answer to this will come after 2-3 sessions, okay. But let me just tell you in a very summarized manner. He will be able to save himself. The auditor will be able to save himself if he is able to prove that he conducted the audit as per the standards on auditing, and he acted diligently. He exercised all the skills while applying the audit procedures. Okay. If he is able to prove that he did all the auditing as per standards on auditing, but yet he has come up with a wrong opinion, he might be able to save himself. But if, let's say, he is not able to prove that he did his auditing in a well-structured manner as per the standards on auditing, and he has given a wrong opinion, auditor will also go into the jail. You must have heard, we are going to discuss some aspects also that like in case of Satyam fraud and all, the auditors also went into the jail because they were not able to prove that they obtained sufficient and audit evidence. They were not able to prove that they conducted the audit as per the standards on auditing. Okay, so opinion may differ. I totally agree with you on this. Two chartered accountants may give different opinion, but you have to have concrete proof, concrete conclusions as to why you came up with this opinion. Right? So this aspect, whether the auditor will be liable or not, we are going to discuss after 2-3 sessions, probably very much in detail. Okay. All right. Now, are these 4 opinions clear to everyone? Because If you have any doubt in these 4 opinions, again these 4 opinions, every chapter, every page we are going to refer to one of these 4 opinions. Okay, if you have any doubt in these 4 opinions, please ask me. Feel free to ask me right now. Disclaimer, yes, I am just going to give you the example again. Disclaimer means we are in a position, let's say I went to an audit, but the entire books of accounts, it got burned due to some fire. There is nothing left. I have no books of accounts left to check or verify, nothing. I will not be in a position to give any opinion. Let's say the books of accounts have been seized by the income tax department. They produce only photocopies to me. I cannot give an opinion on the basis of the photocopies. So I am not in a position here to obtain sufficient and appropriate audit evidence. Hence, I will be giving a disclaimer of opinion. Is this fine now? Okay. Now, let me just, on a very lighter note, in order to understand types of opinion, let me come up with an analogy. Okay. When I was studying, I remember that I attended a session. I don't remember as such the name of the speaker, but he made us understand the types of opinion by giving a very funny example. Okay. Let me just recite the example again so that you are also able to understand and keep the 4 opinions in mind. Okay. Now, let's say Ramji is in class or not? Yes, Ram. Yes, Ramji is there. Okay. Now, let's say Ramji, he becomes a chartered accountant and he is working, and now time comes when obviously his family is now pressurizing him to get married. Okay. So what happens is he goes to different to see different girls, to different families and all. Okay. Now Ramji is always accompanied by uncle. Okay, by his uncle, let's say. So let's say for the first time when he goes to a girl's place to see the girl, to meet the girl. So Ramji is sitting like this and uncle is sitting next to Ramji, let's say. Okay. So the girl comes, imagine the scenario. Okay. The girl comes with the tray and all the juice and tea and all. Okay. And she keeps the tray there. Okay. The moment Ramji sees the girl, okay, he indicates to his uncle, he pokes the uncle and says, "Uncle, okay, I am liking the girl. The girl is giving me true and fair view." That means without any qualification, without any restriction, Ramji concluded, Ramji gave his opinion that the girl is giving me true and fair view. Okay. Now, this is which opinion? This is which opinion? What opinion? Which opinion Ramji gave? Unqualified opinion. Unqualified, right? Okay. Now, second, let's come to the second scenario. Okay. Now, Ramji tells his uncle, he pokes his uncle again and tells his uncle that I want to talk to this girl alone. Okay. So, uncle tells him, okay, there is a veranda there. Go to the veranda, take the girl there. You discuss whatever you want to discuss and whatever you want to talk. Okay. So, Ramji starts talking to the girl and she is very beautiful, beauty with brains. She has knowledge about everything. She knows all the accounting standards also. So Ramji also is interested and they keep on talking, but only to realize, at some point of time, once the girl also becomes frank with Ramji, Ramji realizes that the girl is very foul-mouthed. Every second line she speaks, she comes up with a slang. Okay, this is just a hypothetical scenario. Please don't take it personally, everyone. Okay, so she comes up with a slang. Okay, and but still, okay, Ramji was impressed because she was very intelligent. She has also done CA, let's say. Okay, so the discussion was over and Ramji came back to the drawing room. So uncle again asks, "What is your opinion?" So Ramji will say what? That the girl is giving me true and fair view subject to her foul-mouthed words, subject to the slang she uses. She is giving me true and fair view. Now, what kind of opinion is this? He has basically given one restriction, one qualification about the girl, but overall he likes the girl. So what kind of opinion is this? Ramji, how disclaimer? This is qualified. This is qualified. You say that the girl is giving true and fair view. The girl is overall very beautiful, beauty with brains. She knows, I told you, she knows auditing. She knows everything about income tax, all the general things happening. You are very impressed by the way she talks. But again, as and when she became frank with you, she comes up with a slang. Okay. So when your uncle asks you your opinion, you say that the girl is giving true and fair view subject to only the slangs which she uses. Okay, so this is just a small qualification that Ramji has added. So this would amount to qualified opinion. Okay, now let's say imagine the third scenario, disclaimer of opinion. Now let's say, yeah, third scenario, Ramji goes to see a girl, okay, and let's say, assuming it is the present times, okay, the girl comes with the tray of tea and juice and all. But now what has happened is, because of the coronavirus, the pandemic, the girl is with her mask on, and even she has put the face shield also, the transparent face shield. Immediately when she comes with a tray, uncle asks Ramji, how is the girl, how are you liking it? How will Ramji be able to tell? The half of the face is covered with the mask, the remaining portion it is covered with the face shield, okay, and uncle is asking Ramji, how do you like the girl, how is the girl? Obviously in this scenario, Ramji will be like, how can I tell you, how can I say, what kind of opinion he is going to give? What? Disclaimer, he is not able to give any opinion here. He is not in a position to obtain any evidence, and as such is not going to give any opinion. Okay, alright, this is that's it, the scenario in the present times I have just discussed. But let's say Ramji, he's fed up of seeing girls in the southern region of India, so he goes to somewhere in north, okay. Let's say he goes to a remote place in Haryana, okay. Similar situation, okay. So the girl comes there and she is wearing her ethnic attire there, and her face is covered till this much, the ghungat, the traditional attire they wear, they cover their face this much. So uncle immediately asks, how do you like the girl? Will Ramji be able to answer? He is not in a position to see the girl. How will he say that the girl is giving true and fair view? Yeah, obviously, disclaimer of opinion, right? Okay. Now, fourth scenario. Again, he goes to see a girl. The girl comes, he asks his uncle, I want to talk to the girl outside, okay. So they go out, okay, and immediately the moment they go out, okay, so what happens, the girls pulls out a gun, puts it on Ramji's head here, and tells Ramji, you have to marry me. Say yes right now, or I'll shoot you. Ramji obviously gets frightened and he gets scared, and the moment he comes back to the drawing room, he's like, uncle, let's go. Okay, uncle will ask, what happened, what kind of opinion he's going to give? Adverse. Worst case, how can he marry a girl who does this to him? Okay, or on a lighter note again, let's say he talks to the girl only to find out that the girl is not interested in boys. She is basically not straight, she likes girls only. Now again, Ramji is going to come to that drawing room and his uncle asks him what kind of opinion he is going to give. Yes, Ramji. Obviously adverse opinion, right? Yes, so I believe now this was just on a lighter side to make you guys understand that what can be the different types of opinion, okay, and please don't take it personally, just on a very, very lighter note, okay. So I believe now the four types of opinions are very clear to you. Any doubts you have, please you can ask me right now. Perfectly clear? Okay, fine, alright. So coming back to I have just explained you. Let us read the 4 points from our notes and let us wind up this topic of audit process. Okay. So what is unqualified opinion? Auditor expresses an unqualified opinion when in his opinion and based on the information provided to him and audit evidence obtained by him, he considers that the financial statements of the entity give a true and fair view. So when the financials are giving true and fair view, the entire financials is going to issue an unqualified opinion. Okay. What about qualified? So when the auditor is not satisfied on some matters relating to financial statements, for example, in my case, I told you inventory. For example, in case of Ramji, I told you foul-mouthed girl, right? So when he is not satisfied, when the auditor is not satisfied on some matters relating to the financial statement, but satisfied with all other matters, he issues a qualified opinion. Okay. Alright. Disclaimer of opinion. An auditor expresses a disclaimer of opinion when he is unable to obtain sufficient and appropriate audit evidence. If you want, you can write the example also which I just quoted, that the books of accounts has been seized by the income tax department, so the auditor is not in a position to analyze the books of accounts. Okay. Now, and finally we have adverse opinion, when the auditor expresses an opinion that the financial statements are not at all giving true and fair view. That means all the items of the financial statement are misstated, and as such the entire financial statement is not giving true and fair view. Is this clear? Yes? Okay. So I have completed the topic of audit process, but let us understand what is audit process. Audit process refers to the sequence of activities performed in the formulation of audit opinion on the financial statement. Sequence of activities performed in the formulation of audit opinion. And what is the sequence of opinion? We have just covered all the 9 stages here in the form of a diagram. Okay, so I'm just repeating it once again. First is appointment of auditor, then determine objective and scope of audit. Okay, then understand the entity, the client, and internal controls, so that we are able to assess the ROMMS, and accordingly we are going to plan for the audit. Okay, up till this part, actual audit has not even started. The actual field work starts by performing audit procedure. When you go to the client's place and you do the various audit procedures, so by doing audit procedures, you always try to obtain sufficient and appropriate audit evidence. On the basis of these evidences obtained, you draw conclusions, and on the basis of all the conclusions obtained, you ultimately give an opinion in the form of an audit report. Okay, and what are the 4 different types of opinion? That too I have already discussed with you. Fine. So the entire topic of audit process is now completed. Okay, now because just one thing I would like all of you to note, because now the technical word, I just want you to give a heading, small topic I want you to write: link between internal controls, risk of material misstatement, and AP. AP means audit procedures. Okay, link between internal controls, risk of material misstatements, and audit procedure. Okay, now just a small chart I want you all to draw. Let's say strength of internal controls. Okay, this is strength of internal controls, this is risk of material misstatement here, and I write extent of audit procedure. Earlier I discussed this in the previous session also, but I was using the word there, the workload on auditor. Okay, but now we are going to use the technical word extent of audit procedure. Audit procedure means the methods, the techniques which the auditor applies in order to obtain audit evidence. Okay, now let us understand the scenario. Now if the auditor assesses that these internal controls is adequate, okay, so ROMMS will be more or less, and if the ROMMS is less, the auditor will now have to do more work or less work. Now I'm not discussing in terms of more work or less work, let us get into the technical terms. Now the extent of audit procedures, the procedures which the auditor will need to apply now will be more or less. Extent of audit procedures. Okay, and let's say if the internal controls are not adequate, it is weak, so my ROMMS will be more or high. Okay, I should better write high. Okay, and extent of audit procedures will be, will I have to apply more procedures now and obtain more evidence? Yes or no? Yes. So I'll say more procedures. Okay, just copy down this chart also for your understanding. Fine. So this is it in the concept of audit process.